what is there is 80C is all about. Most of the individuals in India, they are aware of this section 80C, but they don't know where to invest under 80C. So most of the people, they are rushing towards the insurance premium. And there are so many, the ways of investing under section 80C. You can have the deduction of 1,50,000 rupees. You can have the deduction of 1,50,000 rupees in there is investing in different government schemes that is given by the Income Tax Act. This is the big list is given to you. You have to choose based on your analysis. You choose your investment, which option is best for you at this case. That is why the yearly tax planning is very, very essential. Don't rush in the month of March. Don't rush in the month of February and March. Please do plan accordingly. Don't go for endowment policies. Instead, you may have some term insurance. Instead, so these are the things comes under the 80C. Life insurance, there are so many policies that is given by insurance, Life Insurance Corporation of India. Okay, so it is a public corporation, has been separately that is passed by this one. There is a Parliament Act, Life Insurance Corporation, right? So Indian government is always having the association with the Life Insurance Corporation, right? That is why they are including this 80C. It is the money, it is going to the government of India only. That is why they are encouraging this type of investments, because the money will be kept with the government only. These are the schemes by the government only. Please do understand. Equity linked savings scheme. I'm talking about the life insurance. Instead of going the endowment policy, I suggest you go with some term insurance. It will be helpful for you. So with respect to the life insurance, so you can take the insurance, you can pay the insurance, you can take the policy for your child, for your spouse, not parents. My dear friends, please do understand. Whether the child is a major, you can take the policy for your married daughter also. Please do understand. So there are always having the confusion. The people, they do have the confusion whether my daughter has got married, whether shall I make there is a policy on her name, whether it is comes under the 80C. Yes, even it is a child, whether it is a major or minor, married or unmarried, so you can take there is the policy on their name, right? You can deduct, you can get the deduction from 80C, but the maximum ceiling is capping is 1,50,000 rupees. Then Suganya Samriddhi account. If you have the girl child, so the government is extending such a wonderful that is return, high return is given to you. Suganya Samriddhi return. So Samriddhi account, it is if you have the girl child and they are less than 10 years of old, you can start investing maximum 1,000. There is a 1,50,000 you can invest in Suganya Samriddhi account, right? So every year at least you have to pay. There is a 250. There is a lock-in period. At the time of 15 years you have to pay. At the time of 21 years only you will get back your amount. But the return is very, very good amount, nearly about 9 to 10% return. Please, you plan accordingly. It is a very, very safe and very safe. At the time, after 15 years, you will get back the amount. If your daughter is getting married, in that case, you can withdraw. If your daughter is go for higher education, in that case also you can withdraw. There are so many benefits. Just you go and you see the provisions of Suganya Samriddhi account, right? Then equity linked schemes. There are ELSS funds. The equity linked. This is what. So there is a lock-in period of 3 years. So it is very clear. So I'm buying the funds, ELSS funds, sir. So I'm selling it tomorrow. So you cannot avail. You cannot avail 80C in this case. So there is a lock-in period. At least you should have that fund with you at least for 3 years. Then only you can avail the benefit of 80C under this equity linked saving scheme. That is the best scheme. I suggest you accordingly you choose the best scheme. There are so many mutual funds are in, there is a market debt fund, hybrid fund, there is equity fund, there is gold fund. So many funds are there. So in equity based fund, not there is debt fund, only equity linked funds are eligible. That should be having the lock-in period of 3 years, right? Then comes employee provident fund. You are the contributing some amount and your employer is contributing amount, so the total comes to 1,50,000. Yes, you can enjoy this 80C. Then public provident fund, another big thing I can suggest you people, if you have the surplus amount, so please do invest in public provident fund. It is comes under the separate act, Public Provident Fund 1968. So they are giving the guaranteed return of nearly 8 to 8.5% guaranteed return. For that, you have to, you can pay even if amount also you can invest in public provident fund. You can open this PPF account in either any banks, nationalized banks, or any post office. Please do understand, even a multiples of 500, even you can save 500 rupees amount also in PPF amount. PPF is the best option, you can get the return, but there is one drawback is there. If you have the surplus amount, then you can, there is invest in PPF. It is a lock-in period of 15 years. It will be locked. What is lock-in period? You cannot take back the money as soon as possible. But equity linked schemes, if you need money, you can take your money out. Very liquidity is very high in case of equity linked savings scheme. But in case of Sukanya Samriddhi, public provident fund, national pension scheme, and term deposits, in these cases there are a lock-in period is there. Okay, in public provident fund there are exempted. What is exempt? At the time of investing, you are availing the 80C PPF. Then whatever the interest is accumulating on the PPF amount you are investing, that is also exempted. Then at the time of maturity, whatever the amount you are getting back from the government as maturity of public provident fund, that also exempted. So these are the very beautiful things are there, but there is a lock-in period. You have to keep your money with the government, the public provident fund, at least 15 years. Then only you can withdraw. Okay, certain exceptions are there. After 7 years, you can withdraw for your, there is any emergency cases, in case of death or in case of any higher education. In that case, there are some provisions is given. After 7 years, you can withdraw some amount from the PPF. Please do understand. Then comes National Pension Scheme, NPS. So this is a very big lock-in period. So those who are attaining 18 years of old up to the age of 60 years, you can, up to the age of 60 years of old, you can, that is invest in a national pension scheme. Okay, but the lock-in period is very huge thing. That is up to 60 years you cannot withdraw the money. So after that it will yield the pension to you. That is why, that is the ultimate aim of this scheme. So they are getting the amount from you. After attaining your retirement, the age 60, you will get the money that is uncommitted. Every month you will get the pension like this. That is the scheme all about. National Savings Certificate, you all know about the NSC. Then fixed deposits that should have at least 5 years. Then post office tax saving deposit that should have 5 years of term deposits. Post office senior citizen savings scheme. These all comes under what? There is 80C, right? Then tuition fees, whatever you have filled, not development fees, not capital fees, only tuition fees. Whatever you have paid, you can take. So this is applicable for all the there is parents. Whatever the tuition fees you are paid, whatever you have paid during this academic year or financial year, so you can claim through 80C, right? Then the home loan repayment, the principal amount you are paying there is a home loan back. So you are paying the principal along with the interest. The principal amount also, whatever you are repaying the principal amount, that also comes under this 80C. Please do understand, you go and see all the things. Then comes 80D. This is very good section. You should all know about this section. So if you have the mediclaim, so instead of going for the endowment policy of insurance, you go for some, that is a mediclaim. for your spouse, your dependent children. Here 80C, all we talk about, please do understand, my dear friends, 80C, I'm talking about the married, whether it is married daughter, unmarried daughter, whether it is major or unmajor, all are eligible for insurance premium, right? For here, if they are dependent children, your children is dependent on you, in that case, you can make mediclaim, you can pay the premium, there is a mediclaim policies. So you can, that is claim up to 25,000. And for your parents also, whether they are dependent or not, it is irrespective of your spouse is dependent or not, whether your parents are dependent or not, you can avail this benefit of 50,000. Okay. Next case, your parents are, there is senior citizens. They have attained the age of 60 years. They are the resident of India. Please do understand. So your parents is resident in India, they are staying in India, they are resident in India, you can avail 50,000. Okay, sir, my parents are there in the foreign country. So can I avail? Yes, you can avail, but limited to 25,000 only. You cannot avail the senior citizen ka jo, whatever the benefit it is extended to the senior citizen, you cannot avail. But the normal parents, you can avail up to 25,000. Your parents are in, there is a foreign country, you are making some premium on their name. So in that case, you can charge the 25,000. Okay. If they are the senior citizen, you are the resident of India, then you can. There are both conditions has to be fulfilled. They are the senior citizen and they are the resident of India. In that case, you can avail 50,000 rupees. Okay. The third comes, you are the senior citizen and your parents are also a senior citizen. In that case, you can enjoy, that is the deduction under section 80D, 1 lakh rupees directly you can deduct. And whatever the premium you have paid towards your self, spouse, dependent children, that is parents, whether are dependent or not, you are eligible, right? So 80D is such a beautiful section. Accordingly, you plan. So, right, let's move to the next one. So 80DD, what is a 80DD? So if you are having any child on a dependent. So in this case, your brother, please do understand, your brother or sister or any individual are fully dependent on you, you are maintaining them. They are having the disability. There are two types of disability. One is normal disability. If they're having the 80% of disability, more than 80%. This is what we call it as severe disability. If they do have the disability, but it is normal disability, less than 80%, in that case also you can claim 75,000. Please do understand, my dear friends, no receipts is required, no expenses is required. If you are supporting them, you can directly claim 75,000 and 1,25,000. There is no need to show this is the receipt what I have spent for them. So here, please do understand, there is a disabled person, maybe your spouse or children or parents, brother, sister, or anyone is depending on you. Please do understand, right? So you can take this wonderful deduction of 75,000 in case of normal disability, 1,25,000 in case of severe disability, right? This is next comes. So DDB. Okay, sir. So my parents are getting too old. They are attaining 70 years. So in that type of situation, the insurance companies is not ready to take policy because they are old parents. The dependents are old, very old. In that case, they're not ready to. The insurance companies are not ready to make new policies on them. In this case, there is a medical, whatever the if you do have some specific diseases under section, there is a Income Tax Act 1961. In this case, the normal citizen, so based on there is proof, whatever the amount you have spent, so you can claim up to 40,000 for the normal citizen. If you have the senior citizen, so you can claim that is up to 1 lakh rupees, 40,000 for the normal citizen. If you are, that is a senior citizen or dependent is senior citizen, or you can claim up to 1 lakh rupees based on whatever you actually spent other than cash. My dear friends, please do understand? So other than cash, it has to be digital. You might have paid through check or through digital, right? In this case, you can take either 40,000 rupees or 1 lakh rupees as the case may be, right? Then comes section E. Most of the parents may touch this one. Educational loan. Educational loan to whom? You can take the educational loan to yourself, your spouse, child, or for any legal guardian, any student, any person. For them, you are a legal guardian. So you have taken a loan and you are paying the interest. You are paying the interest. Please do understand, there is no maximum limit for there is a ceiling limit is there. Whatever the interest there is, you are paying on the repayment of the educational loan. So you are availing this deduction under section 80E. Please do understand, my dear friends. So those who are repaying, once you have started repaying the educational loan, you are repaying the principal along with the interest. For the interest portion is deductible from our total income. Okay, so this can be carried forward for the 8th assessment year. Up to 8th assessment year, you can claim this deduction. After that, you cannot claim. Okay, the maximum limit is given to you. Maximum 8th assessment year, you can take the this benefit of that is interest paid on educational loan. Right. Then comes EE, 80E. So if you have, so it is not for the new, that is for the present taxpayers, those who are, that is purchased the new house property. Please do understand, those who are purchased a new house property, there is a flat, you have purchased a flat during the financial year 16-17. This is the, in Finance Act, 16-17, they have introduced this one. So those who are, there is purchased a flat or a home, there is the value is less than 50 lakhs and the amount of loan is less than 35 lakhs, you can avail the deduction of 50,000 rupees from your, there is total income, right? This is, there is 80E all about. There is interest paid on home loan, right? Sir, actually already I'm availing the home loan from the house property, sir. Yes, you can avail, there is up to the limit of 2 lakhs in the house property section. If anything is there, if you are paying the interest in a particular year, you might have paid, there is 2,70,000 interest. So you can take, there is 2 lakh rupees from the income from house property as deduction, and here 50,000 from 80EE. More than, there is it is additional, it is extra benefit, it is extended by the government to you through the new section 80EE, right? For this year, there is a new section has been merged, that is 80EEA, 80EEA. So you have purchased, so you have not availed. First thing is, the first condition, you should not have taken any deduction in the previous 80EE, right? Now you have purchased the house value less than 45 lakhs, less than or equal to 45 lakhs, right? You should not own any residential property previously. This is going to be a new house for you. It should have been purchased in the year of financial year 19 during the last year, that is the previous year 1920, the house property should have been bought. Another thing, the individual should not be eligible to claim, that is a deduction under section 80E. So either the taxpayer can avail 80EE or 80EE. They cannot avail the both. So here the exempt, there is a deduction limit is 1,50,000 rupees. In 80EE, those who have purchased the house during 16-17, for that they can avail the deduction of 50,000 rupees. Now here, so the loan should be taken. Please do understand, the loan should be taken here. So the previous year 1920, the loan should be sanctioned during the previous year 1920. In this case, you can avail the fantastic deduction of 1,50,000 in addition to the home loan of the home loan interest under the section is 24B, the income from house property. So you can have the deduction of 3,50,000 rupees. So in under section 24, you can claim 2 lakhs rupees, and here 80 WA, there is you can claim 1,50,000 rupees. Total, you can claim 3,50,000 rupees. Please do note of it. So most of the this assessees, most of the taxpayers are not aware. So please do note of it. So accordingly you plan for your taxes, right? Then comes 80 WEB. See here, this is the for promotion to the electric vehicles to eliminate the usage of the petrol vehicles. So they are encouraging solar as well as the electric vehicles. This is the section. It is purely for those who are going to buy a new electric vehicles. So the loan should be sanctioned during the year 1/4/2019, from 1/4/2019 and 31st March 2023. There are 4 years you are given. In this period, you have applied for the loan. The loan has been sanctioned. If any interest you are paying, that is deductible. That is deductible under the section 80 WEB. Please do note of it. Please go for electric cars. It is going to be electric cars next after 10 years. It is going to be electric cars wherever you go. So there is a very, very conservative, very, very long. There is energy saving. This one, the electric cars. It is going to be a revolution in the next 10 years. So that is why for promoting there is a sale of electric cars. The government has come out of with wonderful reduction. Section 80 WEB, right? Next comes beautiful section. You all are aware there is any donations to the charitable institution. There are a very big list is given by the Income Tax Act. Different funds are there. You are giving that. See, all should be in a digital form, either check or through a NEFT or so. You can give maximum 2,000 rupees in cash. Maximum donation you can extend rupees 2,000 rupees. You can extend through cash. If it is more than 2,000, so only 2,000 is eligible. Okay, so just you go ahead and look at there is a provisions. It is 100% deductions are available for some charitable institution. 50% deduction is eligible for some there is charitable institution. You go ahead and you look once the different lists of the charitable institution. Accordingly, you plan for the donation, right? Then comes 80 GG, right? So most of the some taxpayer is still there. They are paying rent. They are on there is a home other than they are not the owners. They are paying rent. They are the tenant, but they are not receiving the HRA from their employer. Please do understand, my dear friends. First one condition: you are not receiving the house rent allowance from your employer. First one. Okay. Another one: you are not owning the house. You are paying the rent. You are a tenant. You are paying the rent. You are living in the rented house, right? In this case, so you are not going to get the exemption of HRA because you are not receiving the HRA. So government has come out of this section 80 GG. So those who are not receiving the HRA but they are paying the rent, in that case, for every month you can there is a 5,000 rupees, or you can avail the deduction of total 60,000 per year. That is 5,000 rupees per month. So just to go ahead and look at this section, there are so many conditions are there. So if you are satisfied with all the conditions, definitely you can avail 60,000 rupees as your deductions, the big amount, right? So just you go ahead with them. Another thing, 80 TTA. So most of the people are not aware. 80 TTA, this is the interest. This is the interest from your savings bank account. Okay. This is the interest from your savings bank account. So up to 10,000 rupees, so it is not, it is exempted. You can take the deduction out of this interest from your savings bank account. You have the savings bank balance. If your amount is say for example, your total interest for this year is 30,000 rupees. So only 20,000 is taxable. You can deduct 10,000 rupees under the section 80CCA. Please do understand. Only individuals are eligible. Okay, so you can take all the savings bank account. The normal citizens or whatever you are having the account in the post office or any cooperative society or a bank. Please do understand. You can have the savings bank account in banks or post office or cooperative societies, and up to 10,000 rupees you can have the deduction, right? Then comes for the senior citizen. So I told in the 80 TTA, I told only savings bank account. But in case of senior citizen, please do understand, my dear friends, in case of senior citizen, you are getting the interest from the fixed deposit also. In a year, 50,000 rupees you can claim as a deduction under section 80B, right? This is a special section. This is the government has come out of this for giving the additional advantage to the senior citizen. Whether they have the term deposits or fixed deposits or any savings account, the total amount of 50,000 rupees you can deduct from your salary, right? It is applicable for only senior citizens. Okay. Then comes if the taxpayer individual himself is a disabled person. In that case also you can enjoy the 75,000 rupees or 1,25,000 rupees. Sir, how can I decide whether I'm having the normal disability or severe disability? You have to submit a medical certificate from the central government medical practitioner or any state government medical practitioner. You have to obtain a certificate citing all your disabilities, and the respective medical practitioner has to certify these are all the disabilities. This assessee, this taxpayer comes under the normal disability. If they comes under normal disability, they can claim 75,000 under this section, because the taxpayer himself is going to deduct. Sir, I'm having the dependent, he is also a disabled. Yes, you can take for yourself 75,000. For your dependent, my child is having some disability. Yes, you can take 75,000 for yourself, for 75,000 for your child or any dependent, whether he may be or a brother or sister. You can avail 75,000 plus additional 75,000. If you have the severe disability, in that case, you can go for 1,25,000. No need to show any receipt. I have spent this much of amount. No need at all. So directly you can claim 1,25,000 showing the disability, right?